Hello and good evening, everyone. Welcome to a new episode of Investing Fool. Typically, we do the rebalancing on the first day of the new month. This is the end of the month rebalancing that I'm talking about, the first day of the new month based on the closing prices of the previous day. But this time, everyone was in celebration mood. The markets were not celebrating as much, but the people were celebrating Diwali. So there was an interruption, and we'll be doing the rebalancing tomorrow. But I don't think I'll be able to record the video tomorrow. So I'm trying to get this out today based on the last closing prices. So we have some changes in the portfolio that we are going to discuss in today's video. So we'll discuss the performance of the portfolio in October, what it has been doing, what the market has been doing, what entries and exits we are making, and then we'll close it. My availability is going to be a bit patchy this month, so at least until the end of November, I don't think I'll be able to record a lot of videos. So in case I'm like making some changes on the portfolio, I'll update the sheets, and I'll definitely post an update on the YouTube channel. So please, you can subscribe there to know the updates. But anyway, I'll be making the changes on the sheet as much as possible. Okay, so let's get started with today's video. And before moving forward, as always, the disclaimer that none of this is financial advice. So please consult your financial advisor before making investments. This is just for educational purpose only. Okay, let's get started. So we are at the end of October, the rebalancing, and 4 stocks are going out of the portfolio and 4 new stocks are coming in. But more importantly, on a standalone monthly basis, October has been the worst month in the history of our portfolio, right? So we started this portfolio. We started the portfolio in November. We started sharing these videos in December of last year, right? So this year, in a couple of weeks, we'll be having like 1 year. We'll be completing 1 year of the portfolio. It has been a very generous year. I will just say that it has been a very generous year, because you can always say that look where I was and look how much I have fallen, right? If we like take a look at the portfolio, the pre-tax total returns were somewhere around like 49%, and we have slid almost like 10%. We've lost like 10-11% from there, right? We are at 38% around. We'll take a look at all of that. But what I'm trying to say is that when a year starts giving you bumper returns like this, and 2023 has also had also been good for momentum investors, then you start getting the feeling that, oh, everything is going so great, right? And then you fall. And when you fall, the mood changes very drastically very soon. People get demotivated, people get stressed very soon. But if you look in the long term, right, if you are like getting anything more than like 15% post tax, it's very good. In my sense, it is very good. So I am more of a conservative investor. Even my universe is pretty conservative within momentum. So yeah, so in the if you look at the long term trend, the year has been really good for the portfolio. But yeah, the last month has not been that good, right? And as I said, October has been the worst month. Typically, when September started, many investors had shared updates that September is going to be so bad, and all that, right? September actually turned out to be decent, right? And after that, October was kind of a surprise, because the Fed rate cut cycle had started. There was no shockers as such, but then I guess the primary reason that everyone is coming back to is the story of the bond yields in US. So they haven't. They have remained elevated, and those are consistent. Even though the Fed has done its first rate cut, the bond yields have remained elevated, and that is giving some kind of mixed signal to the market as to where we are going. And maybe it's not so much as money flowing out of India to maybe China, the China trade and all that. It's more likely to be money flowing out of India and other emerging markets back to the US to take to take benefits of those higher bond yields, right? So if we look at the month-on-month performance, so October we ended with 7.2% negative returns. And this was after 6 consecutive green months. So that is what I was saying. When you get this habit of green months, so every month gives you a new positive, every month gives you a new high. You see very minor corrections. Even this one is is not a major correction in my view. So then you get corrupted, your habits get corrupted, right? So these kind of corrections are very healthy. First of all, because they give you a kind of a reality check in the market. The other is that those who have come who have like found momentum investing very recently and they've started doing it, they shouldn't get the sense that things always move one dimensionally or in one direction, right? Things take a break. That's a surprise. That shouldn't come as a surprise, right? We should be kind of expecting these things. On the overall level, how much we have drawn, I mean, how we have fallen down. The drawdown is 8.6% as of now from the all-time high, which was reached, I think, on 15th of October. Let's look at the where were we exits, month-on-month returns. So anyway, anyone who is watching our video or our channel for the first time, this sheet is always public, so we update whatever we are buying, how at what price we are buying, when we are buying, when we are selling, what price we are selling. All the things are updated here. You can check the month-on-month performance as well here. So yeah, the link is shared in all of our video descriptions. Anyway, what I was coming to is that you can see the you have six green months here, right? And the returns was pretty good, and straight away you have a huge fall in October 2024. Our benchmark index, which is the Nifty 500, Nifty 500 corrected by almost 6.5%. And as happens all the time with momentum, as has been seen in the past, that when the underlying index corrects, then momentum typically corrects a bit more. When the market sentiment is positive, then momentum portfolios also seem to outperform on the positive side as well. Right, so you can see here we have still not breached the 200 day moving average, and this is the equity curve of our portfolio. This is the Nifty 500 normalized from the same starting point. So we haven't breached the 200 day moving average. I'm not sure if we are going to do that. The markets may remain sideways for a long time. I personally do not feel that they're going to go down a lot from here. Maybe 5% or something they can still go down, and we may actually breach the 200 DMA. If we do that, as we had discussed in one of our previous videos also, we are going to stop the entry of any new stocks, right? And but we are not going to sell and move out to cash. So whatever exits come on the rebalancing day, only on the rebalancing day, even then only on the rebalancing day, whatever exits come, we will exit them. That will remain as cash in the portfolio. We will not take any new positions. Only if we breach this, like if on a rebalancing day we come and see that we have breached the 200 DMA decisively, then only we will take those steps. Otherwise, there is no reason to go in cash. There is no reason to do anything with the portfolio. Remain invested, stay invested. That's the most important thing. When market falls like this, if you panic and go to cash, a lot of times it happens that market corrects a bit and then it again kind of rebounds and starts its upward journey. I'm not saying that this is going to be the case this time. It can go anywhere, right? We have to but if we take a cash position and such a rebound happens, that we would not be able to bank on that recovery, right? If you are like at 20%, you will come back to 10%. Then from 10%, when it will go further, you should remain invested to benefit from that. If you are in cash at that time, basically nothing will happen. You have just taken the loss on your portfolio, but you are not gaining back, right? But yeah, if something like COVID happens, then obviously the person who has taken a cash call will be saved quite a bit. Anyway, let's go back here. So yeah, our portfolio is almost 9% away from the all-time high, and our post-tax alpha is reduced to 4%. So if we take a look, we had this absolute return of pre-tax was almost at like 49%, right? And we have slid almost 11% from there, and the pre-tax alpha had like gone to almost 14%. The post-tax alpha had gone to almost like 7-8% or something, and now the post-tax alpha is reduced just to 4%, and this can go on reducing further and further also if the market keeps going sideways. This is not just about 1 month. This can stretch for multiple months. This can even stretch for multiple years. We never know, right? So do not assume anything in the market. In the recent past of the Indian markets, we haven't seen such kind of moves that we have like momentum as a factor has underperformed for multiple years or something. But look at the history of developed markets. We can start that trend anytime. So don't assume that we are going to bounce back very soon. I personally believe that I don't personally believe that we are going to bounce back. I personally believe that we will remain range bound for some time, and unless we like breach something like 23,500 or 23,500, then I wouldn't be like that much worried. If we break 23,500, then I guess we could go much down. But anyway, forecasting is not our job. Our job is just to act as per our strategy, to react as per what the market is telling us, right? Talking about the entries and exits this time. So 4 exits we have this time, 2 large caps, 1 mid cap, 1 small cap going out. We have 4 entries, 2 large caps, 2 mid caps, and share of mid caps has increased, as you can see on the right hand side. From September to October, share of mid caps has increased. Only 1 small cap remains in the portfolio now, which is Techno. Okay. Okay, now let's talk about some exit metrics, and then we'll look at what stocks we have exited and entered, right? Let's actually first take a look at the exits, right? So which all 4 stocks we have exited? These are Bajaj Auto, PCBL, Torrent Pharma, and Voltus. We'll take a look at the charts of these stocks pretty soon, but let's discuss the exit metrics once. So winner percentage, which is the number of stocks which give us a gain versus the total number of buys, total number of stocks that we buy, that has decreased from 42.1% to 40.9%. Loser percentage has increased consequentially from 58% to 59%. And this is because out of the 4 stocks that we have exited this time, only 1 is a gainer, that is Bajaj Auto. The other 3 are losers. Okay. Average gain on winner has improved 26.0 to 26.4%. Average loss on the loser declines from minus 10.6% to minus 10.7%. These are marginal changes, as the diminishing law of returns state that so these changes have kind of tapered off, right? So the more and more variables we keep adding, there are going to be just minute changes here and there. But anyway, so that's the one thing. One significant change is that the average holding period has increased from 78.5 days to 81.1 days. While it may look smaller, but like on such a high number, you are adding almost 3 to the average value, right? That has happened because one of the stocks that we have exited, which is Bajaj Auto, has stayed for 294 days in our portfolio. It has actually become the stock that has stayed the longest in the portfolio. The earlier record was held by HAL, which was there for 242 days, and I think Cummins 184. I think Tata Motors was 180. Okay, this is NTPC. Okay, I guess anyway, the record was being held by Hindustan Aeronautics, which we had bought at the same time. Actually, on the same date, Bajaj Auto and Hindustan Aeronautics both came into the portfolio. Hindustan Aeronautics we exited in the middle of September, and Bajaj Auto we are exiting tomorrow. When I say tomorrow, actually I've updated all. You can see all these stocks that I've added, the last 4 stocks. They are at 0% gain, right? There's 0% gain because I've taken the closing prices of tomorrow, and that's where they are currently also at. But if there are significant changes in the buying prices for tomorrow, then I'll update those as well. But those will be minor changes only. Okay, where were we? Okay. So yeah, so average holding period increased quite a bit because Bajaj Auto had quite a big tenure in our portfolio, almost 300 days. So yeah, that holds the record for now. The only stock that I foresee that can break that record is Trent. Trent might actually remain for more than 1 year. That might become the first stock of the portfolio which will remain for more than 1 year. But let's see. Trent has also slid down quite a bit from the top. Now with this movement, with these new changes, pharma has become the largest sector allocation ever. Ever means ever, like no PSU stocks, defense stocks also maximum, there were 5 in the portfolio. Pharma has now become 8 out of 21 stocks, right? So that's quite a big allocation, and it kind of shows that the market is trying to move towards the defensives, but not all defensive, right? FMCG is doing bad, consumption is doing bad, right? IT and pharma are probably the only ones saving grace, but even IT has faced some very recent headwinds in the last few sessions, right? Okay, now let's look at some of the charts of the stocks that we have exited. So this is these are the charts of Bajaj Auto, PCBL, Torrent Pharma, and Voltas. Bajaj Auto stayed for 294 days, as I said, provided us with a handsome gain of 35.3%, and all of these stocks have exited because of the worst rank held criterion. So their ranking in the momentum screener dropped beyond rank 50, and that's why they got eliminated out of the portfolio. Only one stock, PCBL, has fallen more than 25%, had fallen more than 25%, and that's why it got kicked up out of the portfolio. Although in the last on the last day, which is the Murat trading day, it was up by 5%. So yeah. So anyway, Bajaj Auto has given a gain of 35.3%, PCBL loss of 12.6%. PCBL and Torrent Pharma both came together into the portfolio. Both stayed on for 63 days, so that is 2 months. One with a loss of 12.6%, Torrent Pharma with a loss of 7%, and Voltas remained only for 49 days, and it was a very horrible earnings report by Voltas, and the stock was hammered quite a bit, lost quite a bit of ground, and we are exiting with a loss of 14.1%. So Voltas didn't get a lot of time. There was a lot of optimism about the stock and about the whole consumer durable space, and now with these kind of earnings that Voltas has recently shared, I mean, all that optimism has just vanished, right? So here we are in terms of the exits. Now in terms of the entries, so which 4 stocks we are entering. So by the way, you can see like all the charts of these 4 stocks that we exited are, they remain kind of similar whenever we show these things. So maybe Torrent Pharma is the one that has kind of slowly plateaued and then had a huge fall, and then the last few sessions actually it started rising. But if you look at the other 3 charts, they almost show a very similar pattern, right? This mountain has kind of like started, the curve has started kind of falling, and that's when we are exiting here. I didn't honestly expect something like Bajaj Auto to fall this much, but then everything in the auto sector has corrected quite a bit. We recently had shared one of the videos in which we took a look at the auto sector and what were the things plaguing the auto sector, why everything almost is down. But yeah, I mean, we can't remain invested in something just because we feel it might again recover in the 6 months or something, right? There is no place for discretion here. So whatever the strategy suggests, whatever the rules we have created for ourselves, as per that we'll take action. And even if we don't like it personally, sometimes we have to exit the positions and take up new positions as per the strategy. So talking about new positions, what are the new positions? So the kind of, I wouldn't say it's a surprise, it was kind of expected. I had said in the last video also that probably a lot of pharma stocks are going to come in the portfolio, but a little bit of surprise is that all 4 are from the pharma. Well, Polymed is kind of in the healthcare space, not exactly pharma, but the other 3, Piramal Pharma, Divis Lab, Sun Pharma, all are like proper pharma companies, and yeah, that is why the allocation for pharma has increased by this much, right? If you look at the sheet here, you can look at the sectoral allocation pie chart. Here you can see pharma has like a mammoth share of the portfolio now. This can have its own complications, right? Exposing yourself to a lot of weightage in one sector exposes you to sectoral risk. Pharma is a sector that is hugely impacted by regulations like FDA regulations and other things related to exports. They are very critical, but they're also defensive, right? So let's see where they go. In terms of the returns that we have seen for these stocks that we are entering, Polymed has seen a 1 year growth of 115%, Piramal Pharma 170%, Divis Labs 76%, and Sun Pharma 63%. So Polymed and Piramal Pharma are mid caps, Divis Lab and Sun Pharma are, as you expect, large caps, and as you expect large caps, the returns are also a little bit muted in Divis Lab and Sun Pharma. The RSIs are also muted. So the only stock that looks really overbought is Polymed. It has shown huge spikes in the last 2 days. In fact, if you check the last day, I think it was, you can see something like 12-13% in one single day it had gone, and it can correct quite a bit in the near term as well. So the RSI of 81 suggests that it is highly overbought as of now. Market cap of 32,000 crore. Piramal Pharma RSI is 73, market cap of 37,000 crore. Divis Lab RSI of 60, 157,000 crore, and Sun Pharma has come. This is the largest market cap stock ever to come in the portfolio. This was already part of the Nifty top 10 portfolio, and the 1 year return is 63%, RSI is 47, so not overbought at all, right? May even start going towards underbought, and the market cap is 4,46,000 crore, right? So it's you can take a look at the market cap table. The next largest which is there is Trent, and Trent is almost like half of Sun Pharma. So huge market cap. But sometimes large caps may help stabilize your portfolio also, but there is no guarantee. I mean, we can never feel that a large cap is going to because a large cap momentum stock that has come, we have seen in the recent times, in the past couple of weeks, large caps actually have corrected quite a bit, momentum stocks compared to some of the mid and small caps as well. We had something like Colpal in our portfolio as well, right? We exited that with a loss. So those things can also happen. So there are no assumptions here. So talking about the portfolio in general, where are we? Let's take a look at the sectors, what they have been doing, right? Sectors have been performing really bad, and as I said before, the market has tanked. Our benchmark index has tanked by like 6.5%. That was the return for the month of October. If we look at the 1 month change for all the indices, you can see almost every index is in red, right? Except the banking name. So Nifty Bank is positive, Nifty PSU Bank is positive, Francis Services is positive. Rest everything is negative, top to bottom, right? FMCG, you can see 1 month 6.2, auto is down minus 8.2%, consumption minus 6.3%, metal minus 7.1%. Right, everything is just down. Even IT is minus 3.5% with the recent little bit of correction, and Pharma is at minus 1.25%. So Pharma still looks good, and that is what I mean when I say that if you look at the past performance, stocks that start performing or perform less worse than the other stocks, right? When everyone is falling, then the one who is performing the least worse of every from that pack, that is going to be there in the momentum portfolio. So that is why a lot of pharma names are coming in typically in momentum portfolios, and that is the trend that we see for our core portfolio as well. For the Nifty top 10 portfolio, I have not been able to make a video. I'm not sure if I will be able to, but if I do those changes, as I said before, I'll share the update on the channel. So yeah, that is mostly it for today. If you liked the video, please press the like button. Thanks for watching the video, and if you haven't subscribed to the channel yet, then please consider subscribing to the channel and learning with us and staying updated on the portfolio. That's it from my side for today. I'll see you in the next video. Till then, take care. Bye bye.